This week we're focusing on the PSG Quant Fund, and Cobie has the details.
Eleni,
Yes.
PSG Quant Fund, I mean, we've spoken a little bit about it in the main portion of the show. In September 2011, those are kind of the numbers we're going to be looking at. Just the managers there is Jean-Pierre Matthews. I mean, as you know, he's the managing director for PSG Absolute Investments. There's two co-managers there, Philip van Blerk and David Venter. Philip van Blerk actually has got quite a lead role as far as his fund is concerned. Formation date there, 2003. You can see some of the other information. I suppose the thing that is quite interesting about this fund is that it's got a return target of cash plus 7, which kind of puts it in absolute space. It's got two benchmarks, which is basically Aussie and Albi. It's 70-30 split. And then it's got the Symmetry Hedge Fund Index as well as an actual physical benchmark, so kind of more market related. Then it's got a volatility target, which is similar to All Share with a low correlation. And if you look at some of your returns that are on screen there, let me not run through absolutely all the returns there. You'll see there's two benchmarks, benchmark 1 and benchmark 2. Benchmark 1 being the Symmetry Hedge Fund Index, and benchmark 2 being the hybrid benchmark, which is a 70-30 split between Aussie and Albi. And if you just look at the 5-year numbers over there, you can see the fund doing 16.1, benchmark 1 10.3, and benchmark 2 8.8. So I mean, long-term pretty good returns. Let's just look at the chart we usually look at, which is the rolling return chart. And the rolling return chart that you're seeing up on your screen at the moment shows the returns for this fund relative to the hybrid benchmark. And if you have a look at that hybrid benchmark, I mean, look at some of the performance numbers that you're seeing over here. When this fund outperforms, it's outperforming the hybrid benchmark by close to 100%. And that's on a rolling 12-month basis. That is an absolutely amazing type return. It can underperform, and if you can see some of the underperformance there, minus 35%. And you know, you've got some times of underperformance. You've just seen some outperformance happening again. But that's hedge funds. If you look at the Symmetry Hedge Fund Index, which is the dotted line that I've put through the screen over there, you can see that on a rolling 12-month basis, most hedge funds in South Africa actually mitigate risk quite nicely. There's no negative returns. Whilst if you look at the 70-30 Aussie Albi split, you can see that there's actually quite negative returns that actually come from those. And I mean, another chart we can look at is just the Quant Fund again relative to Steffi, and this is just cash, and you can just see, and obviously there'll be outperformance there. Because of its nature.
Are you happy with its performance relative to the risk?
It looks pretty good. I wouldn't necessarily pay too much attention to the Symmetry benchmark because that is a bunch of a blend of hedge funds that might have nothing to do in terms of risk profiles to this fund. So I would much more look at the Aussie Albi split because that is a sort of representative benchmark of the fund. If they're going to have a volatility of Aussie, but their benchmark has got less than Aussie because there's only 70% in Aussie, one might have a debate about that. But no, this fund's done well.
And Jean-Pierre, perhaps you can give us an indication of how often you relook your positions. I know that it must be really tough right now to even create some kind of strategy given the fact that we've seen so much uncertainty on a global level. How do you go about doing this? Do you see where all the investors are going and go against the grain, or do you look at fundamental factors and then make a decision?
Eleni, this is quite an extreme example of a very unique type of hedge fund. Most hedge funds in South Africa are based on fundamental work. This specific fund is called a CTA fund, or a Managed Futures Fund. And what it does is based on some systematic trading systems that we write. This specific fund will enter into long or short positions in a range of different markets, being the All Share, the All Bond, and the Rand dollar exchange. So at any moment in time, we've got around 19 trend following systems being deployed in the South African markets, and they will have diversified positions of being long and short, and we will implement those trades based on our systematic output, whether our systems are expecting the markets to continue trending upward or downward. So it's a very specific type of fund. It's the only type of fund of its kind in South Africa that we're aware of. But globally, it is around about these type of funds are close to 20% of total hedge funds under management. So to cut a long story short, it's a trend-following, systematic managed futures fund. And we trade in a range of different South African
JP,
markets.
do you use options or just futures? In other words, do you have some kind of downside risk management in place in these strategies?
Now, in this specific fund, we trade predominantly SAFEX-listed futures, and we'll trade in the spot market or in the fixed income market.
Okay.
JP, also looking at the increase in interest in your fund, could you give us an indication if you have seen a very big increase in appetite for your specific fund since the crisis, and since pension funds are allowed to now embark on more investing into the hedge fund industry?
Yes, we have seen a lot of new interest coming to the market. We haven't seen a lot of new inflows in the South African industry, but we've certainly had a lot of inquiries coming from asset consultants and the likes. This specific fund has had a lot of airtime recently due to the fact that it performed so exceptionally well in 2008 and in 2009. So it's the type of fund that is a true shock absorber for a traditional balanced portfolio, and it certainly does add some diversification benefits.
Cobie, last thoughts?
Last thoughts. I mean, I think if you look at it from a return perspective alone, yes, the returns are there. But if you look at it from a risk perspective, certainly this fund has mitigated risk. Just look at your screen quickly, and if you look at returns versus risks, you see that you see the PSG Quant Fund over there relative to an annualized standard deviation of 15%, similar to Balance, but with a much higher rate of return. Yeah, I think it does its job, and I think it's a pretty good example of a great hedge fund.